Stephen, I'm going to make you the presenter. Really looking forward to meeting you and talking to you. I've been to your website and took a look around. Welcome to F.A.C.E, Stephen.
Thanks for having me on. I'm looking forward to it.
Oh, it's great to have you, Stephen. There's your screen. So, I read about your background, and, that's me. And I'd like our listeners and people that see the video later on to know a little bit about your path to where you are now, and how did it begin for you to get into the industry?
Yeah, why don't we just unpack that a little bit? I started my career at investment bank Sandler O'Neill trading financial stocks. And this was well before the crash in 2008. It was a really interesting experience. It was trading all kinds of stocks, both illiquid and liquid. This is before electronic trading really took off. So I started on Wall Street right when everything started.
When the floor was still very busy when you were there.
Yes, it was.
Yeah,
I was a guy upstairs calling down, but the floor was very busy. This is before the New York.
Right. Okay. The good old days.
I can talk about dark pools and how they were being installed on trading desks.
Okay, wow.
In the original days. After that, I moved away from investment bank to a hedge fund. I joined a group of Goldman bankers who were creating a hedge fund that was really going to be focused on U.S. financial stocks. And I was brought on as the young trader to help run all the execution. It was a really interesting time because I was helping putting on a lot of the shorts that turned into these huge winners in 2007, 2008 in subprime. So I had a front row seat for everything that was going on.
Wow.
And the
really,
joke,
what a great road, and how fortunate you were on your path. I'm just thinking about the hundreds of and thousands of traders that are trying to make their way now, Stephen, in the internet age, and really needing a keen sense of discernment to know what is real and what isn't. A couple of the clues I'd say: if someone's trying to sell you the secret to trading, to run away. And anyone talking about 4-digit returns in a year, run away, because hedge fund managers do cartwheels doing 25% a year, right?
Absolutely.
Okay.
And I think some of the most important lessons you learn later on, at least I did, I'm sure you know all about this, Dale, is that the key is not to lose money. It's not always about making a lot of money. It's about avoiding those huge losses.
Yeah, avoiding any loss, Stephen, you know why it's hard to measure, because it doesn't show up in your account. But avoiding bad trades really affects your performance overall, and it's invisible because it doesn't show up on the bottom line, but probably as important as being in successful trades.
Those were advice that I was given from people who tried to mentor me, which was, kid, always try to avoid the big losses and you'll make a lot of money over time. It's about
and that's something at one time we both were called kid.
Yep.
You a lot later than me. All right.
Go ahead.
No, go ahead, buddy.
I was going to give you a little bit of a kicker. That's the story, is that, on the one hand, I was helping a bunch of the ex-Goldman FIG guys short financials, and then I decided to take a break, pursue a professional kickboxing career.
I read about that.
And then I said, okay, let me come back. I want a safe job. I'm going to really focus on becoming an analyst portfolio manager. What wouldn't be safer than AIG in March of 2008? So I joined AIG 2 weeks before Bear Stearns. So I had the perspective on both sides of everything.
Yeah. Okay. So, you had to overcome and be persistent. Getting back to the secret's hard work, persistence, and overcoming adversity. So, it was, in everyone's trading career, there are potholes and detours. And so you had a detour there. And normally I wait till the end of the show, but knowing your martial arts background, I'm going to call you my trading warrior brother right now because I'd rather have you as a friend than an adversary. All right?
Thank you.
All right. So let's talk about Quantumize and what the vision was behind it and what you do and tools and what you're looking at in the markets now, Stephen. Why don't we get to what everyone cares about, money.
Money and what's driving it and how we're trying to help people.
Okay.
Quantumize, the vision for Quantumize is that what we're trying to do is take AI techniques and multi-factor investment techniques and democratize them and just bring them to the average investor. Now, what does that mean in English? That means the techniques that are being used by some of the elite hedge funds right now to generate returns, what we're trying to do is bring it to the average individual investor who's interested in this stuff, doesn't have the tools to actually run these analytics, but really believes some of these things can help them. We're very different than some of the do-it-yourself platforms at the moment that require you to have an advanced knowledge of Python, really advanced knowledge of factor analytics and investment research, and then the ability to build algorithms. So we're crunching 10, 20, 30 million data points a day, looking at stocks, ETFs, options, and cryptos to try to find some of the best trades.
Okay, so is this an algo or did you guys code it? It's proprietary? Did you develop it? Did you develop it? You have the no? Because that would make I couldn't do it.
I developed it with our team. Together we developed it. Everything's proprietary.
Do you need a lot of computer power to run them?
You need a massive amount of computer power. Let me give you an example. There's a lot of noise right now about what we're doing with ETFs. The amount of computer power I need to run the ETFs, I cannot run it on AWS's server any longer. I have a 72 core supercomputer on AWS that I use to calculate some of our crypto data. I can't even run my ETF stuff on that anymore. It's just too many data points.
Okay, I just got a Skype that your personal email may be up on this page that you're showing, in case you don't want to show it.
Don't see
anything bother you? I mean, you know, you're an open book like me. Okay, so you know, most people probably, yeah. Anyway, so you're running these algos. You need huge computer power, and you know, with what's going on in the markets now. The huge recovery that we have, do your algos just spit out trades, spit out biases? Is it on autopilot like a robot? How does it work, bro?
How does it work? So taking a step back for a moment, what we're doing is we try to segment stocks into different categories, right? So let's just look at what we're doing with stocks at the moment. We take the U.S. market and slice and dice it up into U.S. large caps, mid, micro cap. We slice these sectors up into consumer discretionary, staples, tech, industrials. And what are we doing when we do that? The idea really is that each market is different and groups of stocks are not homogeneous. So
a lot of rotation. So you try and stay on top of the rotation from sector to sector.
Sector to sector, as well as looking to see what are the individual factors driving mid cap versus large cap, or what's driving tech versus consumer discretionary.
Okay.
And when we did that, what we found is that we discovered that different factors drive U.S. large cap stocks and mid cap stocks. Now, how are we coming up with these factors and what makes us different? We're actually using AI to find these factors. We're a little bit different than a lot of other shops. You know, the holy grail right now with AI is to use AI to predict asset price moves. And I think that might be answering the wrong question. The more interesting question is, can you use AI to predict the factors that are going to predict price moves and then use those factors to predict price moves? And that's what we've done there.
Okay. So you know what, your AI is also kind of a mentor, and it's pointing your eye in the right direction to where do you get involved in the trading decisions based upon the information you get from AI, or does AI, is it automated just to take the trades it sees, even though it's giving you the factors?
It's automated. The whole process is automated. It's all systematic.
Okay.
There's no human intervention at all.
Okay. All right. So what kind of messages are you getting on different markets right now from your algo and your AI? What are you seeing? I know it changes day to day, but are there any general themes after this recovery from after Christmas to where we are now, and any sectors popping out at you, perhaps oil or the gold shares have been on a bit of a run. What are you guys seeing that may have some legs and staying power as far as trends?
Yeah, why don't I talk stocks initially, and then I can quickly go to ETFs.
Sure. Okay.
With stocks right now, what we're seeing is consumer discretionary stocks seem to be very attractive. I was interviewed at the beginning of the year on the Money Life show, and they were asking, what do you think some of the best sectors are going to be? And I'm a trained consumer tech analyst, but on a fundamental basis. But looking at the AI models and what our factor models were suggesting, it was undoubtedly clear that investors should be skewed to consumer discretionary. And that's been one of the better trades to start the year, being long cyclical.
Okay.
I would say right now, some of the sectors that may be looking interesting to us are utility stocks, given the fact that they've structurally underperformed over the past, I would say, 30 to 40 days. We continue to like some consumer discretionary. And then within tech, this is a little bit contrarian, but we're actually warming up to semiconductors, which have been some of the worst performance, one of the worst performing groups. Can you see my screen right now?
I can. So actually, I look at the ETF SOX, and it actually took out the lows, which would have been taking out the highs. And I know there's other factors in there, but it's actually been semiconductors based on SOX, where you don't have like, say, F.A.C.E making new lows, or SQQ making new lows, or TZA. I'm talking about the bearish ETFs. SOX actually has fully retested its whole advance, which the advance was based upon negative action in semis. Sure. So that is a sign of strength, right? I mean,
I would definitely argue that. And let me tell you some of the other things that we have behind it. If you look at SOX, you're talking about pure technicals. We're actually bringing in sentiment data. We're bringing in data from the options market, which is really insightful for stocks. It's not talked about a lot. And when we talk about options data, I'm not just talking basic implied vol. We're looking at skew. We're looking at implied realized spreads. We're looking at different measures of realized volatility, not just your basic end of the day vol, but intraday vol trends, as well as Garch type measures of volatility.
So, do you look for clues in the option markets when you get huge size, that's unusual option activity? Is that also a tell in your work? Because you really don't need AI to notice that, but do you still pay attention to that?
Two elements. You definitely don't need AI to do that. And if you're a really savvy options trader, that's usually a contrarian signal. But two, we actually do look at that type of stuff. And those are some of the factors going into our ETF models.
Okay. Thank you, Stephen.
And right now on my screen, I hope you guys can see this.
We got
I've
it.
actually brought up the sector signals, since we were talking about sectors. Right now, we've broken it down by provider. We're going to be changing this to the point where it's going to be broken down by actual individual sectors. And what I'm seeing across the board is a bunch of buy signals, which is the first time we've been seeing things like this. I would probably say in about a month. In the past, there were a lot of sells with a real skew to consumer discretionary.
Okay.
But here's an example here. We're looking at our consumer services. This would be a very interesting type of ETF. Flows are negative, but look at the dividend yield. It's 88 bips, and it's a buy signal on a trading basis. Our smart beta score, this is not to be confused with our trading signal. That's looking at relative attributions. This is a really radical product. What we're looking at is what are the actual attributions of a stock, and what's really the beta in there. So if you were to saying, listen, Mathai-Davis likes consumer, I'm not just going to go off AI trading signals. I'm going to go look to see what's the right ETF for me. And there are many people who may do that. Well, I would argue at that point, there's quite a number of consumer stocks. Where do you start? Where do you end? Now, if you don't believe in using trading signals, maybe what you should look to see is what's really the attribution or exposure of your ETF. Nobody's tried to answer that question for individual investors. And it's still very complicated for institutional investors. What really is
a lot of people trade them and don't even really know about them. I'm talking about myself.
Well,
I trade them and I haven't really broken down. So I learned by experience. It's like VIX ETF products. I learned by experience, so all the decay and all those things. So yeah, you're right. Buyer beware. Do your due diligence. And this is something else. You help people understand the composition, the advantages and disadvantages of the ETFs that you're talking about.
It's fascinating, Dale. No one's ever really tried to help people understand what they're buying with ETFs. It's just, here are the fees, here's the AUM. Yeah. Well, that's not enough. Usually what you really should care about, and your listeners should care about, is the attribution. Like, what's actually driving this ETF? Do I really want to buy it? So our idea was, with our ETF product, was let's take a step back. These multi-factor models have been awesome. I didn't talk about the performance, but they're through the roof. Like, just give you an idea, last month alone, our top buys that we're recommending to people were up 9.5%.
Nice month. Nice quarter.
Yeah, perfect.
Nice year. Nice. Nice.
Just at that point, if you're a professional business, just index it and don't do anything. It's been the joke with my team. but if you have great models that predict pricing, you can create models that at the same time that tell you attribution. That's simply what we've done here. So let me walk you through.
Can you show us an example of attribution on one of the ETFs and what you mean by that?
Yeah, sure. Do you see my screen right now with the these ETFs up there?
Yes. Yeah.
So let's look at Amplify Online. So this is our models are saying this is the best consumer one. And now why is it saying that? It's neutral on quality value, neutral on growth. But look at that. It's overweight low vol. It's overweight size, which simply means that it's owning small stocks, but it doesn't look good on technicals.
Okay, and these are the attributes of that particular one. Okay.
Now, you'd say, all right, this is really interesting. They're saying it's the best. It's got a 65% expense ratio, which makes it one of the more expensive ones. But now let's look at this. Now, we've put together this window. Let me make sure it's easier for you guys to watch it, which tells you some basic data about the ETF.
Okay.
What's the last price? All this stuff is real time, by the way.
Nice.
That's what Bazinga's calling us the Bloomberg for the average investor. It's just something that's coming out later on this week, excuse me. You have fund flows data, AUM, but let's say we want to learn more because this is a small ETF.
Okay.
Now suddenly, you have some basic information data, and you're going to love the chart at the bottom. Tells you a little bit about it.
Yeah.
Let's look at how it's done.
Tells you everything about it.
Yeah, well, you see this. Let's start adding a few of these guys. I'm just randomly adding a few. How's it done? Wow, it's not too bad. I mean, look at this, right? Online retail, look at China consumer. I just chose some random ones, but we take the entire peer group and you can do whatever you want there.
What a great intelligence gathering site you put together for people that are interested in, really in stock. And you also apply these ideas in option trades, correct?
Absolutely. I'll show you.
Is that your niche? Would you say that that's your kind of your bailiwick? Is your options work?
No, I'd probably say it's a mixture of the stocks, the ETFs, and the options. Okay. But let me walk you through this.
Okay, go ahead.
You got exposures. You can drill down on holdings. If you want to learn more about it, suddenly you go to our landing page so you can see what's going on here with Netflix. sentiment data. I'm now kind of skimming it so we don't waste too much time on it.
Yeah. Do you have like a tutorial to teach people how to interpret all of this? Is a lot of data.
Yeah,
And,
it is.
So, it's not that people have to learn how you come up with the data, but just how to interpret it and use it. So what do? Do you have a community, a chat room, or tutorials? How do people get the feel for navigating and getting the most out of your research?
Well, there are going to be three elements to it. If we've created a robo chat here where you can interact with us, and it's almost like your internal wiki. Type in any question, anything that can be answered, including videos where we update you on what's new on the site. We've created this online tutorial system where if you wanted to get walkthroughs on how to use things, as well as a welcome to Quantumize.
Okay.
We walk you through everything. We're going to begin hosting webinars where we show people how to use the platform, because what we've tried to do with Quantumize, and I don't think I said this in the beginning, Dale, is really create this awesomely powerful database. Nobody realizes yet, but the entire S&P Global database is powering Quantumize. You have access to the entire S&P Global database. On the ETF side, you have access to the entire ETF Global database. That's over 3,000 ETFs, and we can drill down into flows, fees, anything. Performance data. Okay. But let me talk about.
So it's really like a platform.
Yep, it's there to help people really discover their next big investment. That's our tagline.
Okay.
We're here to really help you here, and it's completely transparent. And what makes this?
Do you guys manage money as well, or your portfolios, like your model portfolios, are like simulated and recommended on the site, but you're not managing money or are you showing real-time trades that your systems on autopilot are executing?
Well, we're showing you the real-time performance of trades, but they're all simulated. We're not putting money to work because what we're trying to do is not create a conflict of interest. What we tried to do, endeavor in the beginning, was to create a system or a platform where there was no conflicts. So we're a bunch of former buy-siders, whether it be the chairman, who happens to be my father, by the way, who ran some very large asset management companies, to obviously me, to our options partners team, who are really elite options traders and portfolio managers. Okay. So everyone's background is pretty extensive on the buy side, but what we tried to do, at least for the individual investor, was remove all those conflicts.
Okay, I got a question from a viewer. Is it possible for people to trade off this platform, or they have to go to their broker and trade off that platform?
Right now, they have to go to their broker to trade off that platform. We're in the process of integrating into several different online brokers, as well as integrating brokerage connections, so that, for example, you see these options trades, and you really want to execute it. Listen, I mean, the returns are through the roof, but it's difficult. I don't want to have to go in and put in a long call spread collar on Apple.
Condor. Yeah, or Condor.
Yeah, Condor. I trade them. Yeah. It's just a
I'm an eagle. I'd rather be an eagle than a condor. Go ahead, buddy.
But imagine the technology, just your listeners right now. Just to click a button, and suddenly it's going to populate for you on your brokerage account, and then you execute it. Just imagine you get it. You sign up for a text message. You want these awesome trades that I've put up here. How do I get access to it? How do I get alerts? Imagine just getting a text message now, clicking it, and suddenly it populates your mobile app. We're not taking commission. We want none of that. I mean, if you want to cancel this, cancel whenever you want. We'll stand by the trades that we put up.
Okay.
And I think one thing that's important to really highlight about us, Dale, unlike everybody else, we tell you what the performance is for stocks, for options, as you can see right now up on the screen. Cryptos, our stock model portfolios. We create portfolios for people.
In crypto.
And crypto. And by the way, we create crypto portfolios too.
Wow.
As well as trading signals.
Okay, let me ask you about it. Obviously, you think it's a viable asset class, or you wouldn't be doing this despite 80% declines in Bitcoin and 90 in Litecoin and Ethereum.
Correct.
Okay. Do you think that you think it's an asset class? Is your analysis giving any signs of this relentless bear market being over?
I would say our algorithms called a lot of the drops last year.
Yeah.
The Bitcoin accuracy rate, by the way, this is what got us a lot of attention on the crypto side. And this is why Global Crypto Press is doing a 3-part series on us, is our accuracy rate right now with Bitcoin has been closer to 68%, meaning we're able to predict the price directions of Bitcoin 68% of the time, which is fantastic at trading. Yeah. And by the way, it's calibrated on purpose to be sensitive to the downside moves on purpose. So the algorithm itself has been calibrated to make sure people avoid downside moves, even if that means you don't get necessarily a 20% jump. You won't get a 20% drop. Structurally, I think longer term, Bitcoin is a very important asset class. It certainly was a bubble when this was ramping rapidly to 20,000. Not to be, I don't think that's much of a surprise given the media push on it in, what was it, November of 2017?
Yeah.
You remember that?
Do you think there was any coincidence with the top and the futures contract being launched? Because prior to that, it was very difficult to short.
No, I don't, because there's not much liquidity there.
Okay.
I would push back. If you were to ask me where I would say there's some, where I guess there was some pressure from structural or regulatory stuff, it would be the ETFs being rejected. Okay. I think there was an assumption that ETFs were going to be widely accepted in Bitcoin.
Right. So that may be the next phase of cryptos gaining, being more adopted once they have ETFs up there. You think that could be the catalyst?
Maybe, or more creative stuff. I mean, I don't know if your listeners care about crypto. We're actually discussing with a few different crypto exchanges right now about a pilot program where we're going to create a portfolio structure that embeds into the crypto exchanges where you can actually buy your own basket of cryptos.
Have you found any that you trust?
Crypto exchanges?
Yeah.
I have, but I'm very uncomfortable recommending them publicly.
Okay.
Just because you just never know.
Okay. I'm just saying I don't know where I would feel comfortable leaving a lot of money in that account.
I would never leave a lot of money on an exchange.
Yeah, unless they're guaranteed by or regulated or guaranteed by an exchange like, the CME.
Right.
Okay.
Well, you're going to get a joke out of this. I have all my crypto spread across about 10 different wallets.
You know what? That's what I hear from a lot of people. Are your wallets made of leather? I'm only, Stephen. I'm only. You're talking
one
to
of them.
you're talking to an ARP. An ARP guy. Stephen, I'm so glad you came here. This is a great resource for people really interested in the equity side, option side, and crypto side. And, it's probably one of the more in-depth resources to really break things down instead of just looking at candlesticks to really get insight into what you're doing before you click your mouse. So thank you for coming here today and edifying the community. And I appreciate it. And I want people to know they could follow you at Quantalytics RES. And I believe that's also with the www in front, your website. Is that correct, buddy?
Yeah, the website is www.quantumize.com.
Okay.
You can follow us on YouTube. That's Quantumize TV. Or you can follow us on Twitter. That's at Quantalytics Res.
Well, I wish you continued success. It sounds like you're in a growth mode like mushrooms, exponentially. And I could tell a lot of hard work went into this. And I wish you nothing but success going forward. Glad that we met. And perhaps we could do this again down the road and dig into it on an even deeper level.
Absolutely. Thank you very much for having me on. It's been a lot of fun.
And what do you charge per hour to be a bodyguard? Because, I have a lot of groupies and I need, some protection.
For you, I can give you
huh? You give me a discount?
Great.
All right, buddy. All right. So my trading warrior brother, Stephen Mathai-Davis, thank you very much for being with us today. And remember, everyone, don't just count your pips, count your blessings. We'll be back tomorrow. See you in members chat. And don't forget to check out Stephen on Twitter and his website. Thanks again, buddy. Good hunting. Good hunting to you.
Thank you.
All right, everyone. So that's a wrap.